Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, 1 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 0.65% for CBAM 1v2 up to 1.05% for CBAM portfolio number 4, and where we saw a slightly tight spread in portfolio performance of about 0.41% for CBAM 5v2. In terms of main contributors to performance, we continue to see runaway performance from our JP Morgan positions in Japan on the back of some stability there politically, where Prime Minister Kishida, even after reshuffling his political cabinet, seems to be angling the Bank of Japan to remain accommodative despite the surge in COVID cases. We also saw a rebound in Bailey Gifford European equity positions, which were quite heavily derated coming into the year, and that would see Bailey Gifford also delivering north of 3% on the one-week basis. We also saw some positive performance there from India and emerging market debt, alongside some continued strength for clean energy alternatives in a rising energy price environment. In terms of detractors from performance, we've obviously seen headlines pointing towards a lot of the developed market central banks beginning to really tighten that rate hiking cycle, and that would adversely affect longer dated government bonds, and that would see weakness from US government bonds from Vanguard alongside Euro government bonds from Vanguard as well, down more than 45 basis points on the week. Uncertainty continues to loom for the UK economy, and that would lead to some sell-off there from the FTSE 250, which obviously has less of a weighting towards financials and energy, which have supported the larger cap counterpart FTSE 100 equities. In terms of a quarter-to-date basis, 3 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from just above 3% from CBAM 1v2 up to north of 6% for CBAM portfolio number 5. As I mentioned earlier and alluded to earlier, again, clean energy alternatives in a rising energy rates environment continue to be strong performers from both our positions in iShares Global Clean Energy alongside Pictet Clean Energy, both delivering more than 19% on a quarter-to-date basis. Bailey Gifford European continues to recover alongside other European equities after heavy derating on a year-to-date basis, and that would see a return just north of 16% for Bailey Gifford European equities. In terms of detractors from performance, as I've mentioned over the past couple of weeks, we continue to see weakness there from our previous top performer in QT across all our Chinese equity positions, and Columbia Threadneedle, Bailey Gifford China, and HSBC MSCI China, both pulling back more than 6% on the quarter-to-date basis. But most notably, this was a 1% improvement in the quarter-to-date numbers that we had reported last week. The headwinds in China, we feel, are by and large known and have been factored into a lot of the derating that we saw early in the year in China when we decided to go overweight, and that would be most recently sustained weaknesses and another lockdown in the province of Wuhan, and sustained weaknesses rather in the property developer market, where we've begun to see some buyers beginning to boycott on payments due to developers not delivering timely projects, and that would see some pullback there for Chinese markets.